Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the other markets that have an impact on the metals prices. And without further ado, Miles, we are again without Robert this week, so pressure's on to give us a full recap of the technical analysis of what gold, silver, platinum, and palladium have done this past week and what you see coming.
Sure, I think I can handle the metals as usual. However, with Robert being gone, our own in-house king dollar, we will do the best we can with the currencies. So starting off with gold this week, we talked about hitting that 50% correction line after we broke through that declining trend line, just to catch up for those of you that may have missed the last couple weeks' shows. Declining trend line broke below it in the middle of November, came all the way down to the 50% fib, bounced hard with RSI divergence. So because of that RSI divergence, we're questioning, is this just a technical trading bounce on a continuation of the short-term bear market? And are we going to come down and maybe see even substantially lower numbers in gold like the 618 fib? Or are we seeing a reversal like we have seen historically in November, December, where we put in our market bottom seasonally and then turn around? So we're kind of at that guessing game at this point as gold hit the 50%, turned around, and we actually came all the way up to the mid-November highs at around 1880. And we've come back down from there. Now, what I do like seeing this week is we have come down and retested both the 382 fib and the declining previous floor that you can see on the chart now. And at least as of time of this recording, we're sitting above both of those. So we came down, we single day bounced them, interday bounced them, and it looks like we may close above them. So I'll be interested to see where we're at tomorrow, Thursday, as I'm putting charts together for today's show. Did we sit at these levels around 1830 to 1840? If we do, and we see price start inching back up, maybe close this week out around 1850, 1860, I may do something that I get mocked a lot about, and that's stop being bearish on the price of gold. So you may actually hear me get bullish here for a few weeks.
No.
Yeah, little old me. So the guy who's been doing this so long that I just never think the price of gold's going up, even though it was like $250 when I started in the industry. Yeah, and real quick before we move on to the other metals, for those of you who've joined us every week, you know I'm very bullish on gold long-term for the deeper fundamental reasons. And the reason I'm always looking for lower pricing is because long-term I am bullish and I just want to buy it a little bit cheaper.
You're always buying.
I'm always adding to my gold position, and a lot of our clients do as well on pretty regular increments. So if you're already in the habit of adding to your gold position, wouldn't you like to pick it up 10 or 15 bucks cheaper? So that's why I'm always looking for these lower pricing. We do get asked that in the comments occasionally as a gold firm, and it's because we're trying to maximize entry levels for ourselves and for our clients. And then one last thing on gold, I thought this was a great comment from last week. Wilson Harjo asked, are you taking the COMEX delivery for December into account? And of course, I tend to err on the side of free market hypothesis and the idea that information is always getting discounted into the price of things. This has been a pretty astronomical year for the CME. In fact, I think their deliveries have exceeded the last 5 or 6 years combined, and they're looking at a big December coming up as well. But that's information at this point. Most of those contracts are hitting their dates at this point, and they're just looking for delivery here in a couple weeks. So personally, I think a lot of that information is factored into the price levels on these charts already. But yes, like any other political news, anytime you see these things take place, even if you knew they were coming to begin with, that doesn't mean they're not going to have zero effect on the day it happens.
All right, so what about silver? That's fun price action for the week with gold, and actually very reaffirming on the technical analysis. And for me, the technical analysis of silver and platinum were also very reaffirming this week. Why don't you show us why?
Yeah, so I think we are seeing some affirmation from the white metals towards gold. However, something we've been talking about for a couple years, how gold's leading the charge, then silver, then platinum. To me, that seems to have reversed over the last couple weeks. Where we've been talking about gold playing around at the bottom end of its trading channel, platinum broke through the top end of its trading channel, came back, retested, and has taken a second step up. Now, platinum's taking a second step down today, but the likelihood it could turn around and make another step up, start this stair-stepping pattern up, looks fairly likely at this point. So in asking about silver, silver's kind of still in the middle. If gold used to lead the charge, now platinum's leading the charge. Well, silver is just now touching its top end of its trading compression down. So silver put its third touch into its declining top end trend line, something which platinum has already broken through and gold is still quite a bit below. So it does seem like silver, if it follows platinum's lead, is going to push above this declining trend line, which right now is sitting at about 24 and change, just about 50 cents higher than the actual spot price is. And then silver should break through that top end channel just like platinum did and then come down and retest. So we've seen platinum do it. If we see silver do it, then gold shouldn't be more than a couple weeks behind. And finally, just because I mentioned platinum, like you can see on the charts here, step up, retest, next step up. Now we've got our next potential retest. So we'll see if platinum continues that pattern, which will make it arguably very bullish going forward.
Can you give us a couple of downside support levels on this small little platinum pullback that we've seen here?
Yeah, I would think the most likely, if this is just a short-term pullback, expecting it to continue and push into bullish territory, I would expect, let's say 960 to 970, because that's the old ceiling from when we did break through those levels. 980 is your high from mid-September. So somewhere between 960 and 980, I think it'd be reasonable to see platinum come down to. That would be a good entry point for me if you're looking at picking up some ounces. And then obviously if it continues down below that, your major support's all the way down at 840. So you have a long way to go before you can even begin to argue that platinum is looking bearish.
Yeah, no, I agree. And that's what I've been doing with my clients. We've got money on the sidelines waiting for that sub-1,000 figure to be hit somewhere in that 960 to 980. So I appreciate the clarity and motivation that way.
Moving over to the equities market, both the industrials and the transports continue to push up. Now, we do argue that the transports tend to lead the industrials on the upside and the downside. While the industrials tend to be stalling around this 30,000 mark, that's a lot of zeros. It doesn't mean anything, but it does to the average person. So getting above those types of numbers makes sense. Now, looking over at the transports have actually continued to climb and are pushing pretty strongly above their previous all-time highs, now up pretty consistently since the beginning of November. So I would expect, being that the transports tend to lead the industrials going into the holiday season, doesn't surprise me at all to see both up. And with what we're looking at next year for potential government spending and increased inflation, there's no reason the Dow can't go to 50,000. It just doesn't mean it's going up and gold's going down.
That's exactly right. You saw that in the Great Depression even, right? They both climbed substantially, but gold significantly outperformed the Dow at that time.
Right. It has more room to go.
Yes. And the equities markets are going to adjust with a weakening currency just like the precious metals markets are, to a lesser degree proportionately, which I think is a big reason why gold has outperformed the S&P 500 in the last 20 years and the last 50 years, right? But that being said, a lot of that, don't you think, is driven by this recent currency weakness that we've seen. There's no ceiling because there's no floor for the dollar.
Well, I would argue exclusively, because if we take into account some of the other political, social things taking place in 2020, the average person isn't putting more money into their 401k. So where's that additional investment money coming from that's supply-demand pushing the equities market higher? And it ain't coming from you and me.
Yeah, I totally agree. And so that's fundamental one this week is the U.S. dollar. We did drop below that 92. We said last week that was very significant, actually coming down below the 91 very, very quickly. And now it is stabilized. Not a whole lot of price action, which there's not a whole lot of price action in any of the markets really, and nothing's broken out of its channel in the last 7 days. So expect some stability in all markets when there's stability in the dollar or in the currency markets in general. And so until you have your next big major event, either a monetary policy decision, right, or some sort of fiscal policy decision, nothing's probably going to be major until, again, a stimulus check being delivered to everybody's doorstep again is a very big monetary and fiscal policy decision. That's being stalled again, right? So everything's being sort of driven by this stall as a result of uncertainty in the political outcomes election-wise. The transfer of power, if there is one, or whoever's getting inaugurated in January is creating a stall, right? And so until then, there's not going to be major decisions being made. And you have the stimulus package being stalled by the Senate right now in terms of, is there going to be a state and local municipality bailout included in that, or is there not, right? So until then, I kind of feel like we're going to almost pause here a little bit further until we see something like that. But COVID's still driving things, whether it's vaccine or increased cases or decreased cases. And those are the other primary fundamentals that the precious metals markets are waiting to see right now. Bond market, very, very shaky, right? Jamie Dimon came out from JP Morgan and said he wouldn't touch these bond prices with a 10-foot pole right now. But he also jumped on the Mnuchin and Powell bandwagon saying, look, economic outlook is, his quote was, a little murky. It's worse than a little murky. It's like pond scum, right? So sorry, but the numbers aren't looking good and things aren't reopening at a quick enough rate in order for us to have any hope for the first quarter. There could be some second quarter hope. Secondly, he's saying stimulus is needed for unemployed and for small businesses. Yeah, you're seeing a huge separation right now between the big getting even bigger and the small failing. Right, and you're getting a decimation of the middle class. It's very, very concerning to the economists, very concerning even to the big bankers. But, you know, he also says that the banks should be held accountable and be allowed to fail. Well, yeah, that'd be nice for JP Morgan to have even less competition. But that's the problem. It's not going to be JP Morgan failing. It's going to be the small hometown bank that's going to be failing.
Oh, JP Morgan will fail. It's just what happens after JP Morgan fails.
Well,
they get unfailed.
Yeah, they get bailed out in a sense, or bailed in nowadays. That's
nowadays.
why people own gold. So, you know, all of those are reasons that, look, you know, whether you're worried about a reset, you're worried about a cashless society or some major monetary event, some major fiscal stimulus package or whatever that is, those are all reasons to be allocating a part of your portfolio into gold. And that's our small piece of the pie. Let all of that and the technical analysis be very reaffirming.
Right, and it's why when we see these bounces in the dollar, like the dollar hitting 90.5 and a little bounce here, who cares? It's going to bounce. Technicals are going to do what technicals do, and there are always going to be people trying to scrape profits in either direction. But that's why you do need to counterbalance it with the longer-term fundamentals. I can't believe I just said that out loud.
Thank you.
You're welcome.
You're welcome to the dark side.
You've baked me cookies, and I believe you now.
But I'm going to tell you, the fundamentals, they're all shaping up to a huge first quarter for the metals. Right? So
absolutely.
Please pay attention to what Miles is saying here technically. These are ridiculous opportunities before the end of the year, and the equities.
Everything's going to do exceptionally well in the coming first quarter.
Yes.
I really think so. The question is why.
Yes.
And that's the thing we're talking about, because right now you're paying the same for a box of Fruit Loops that you did 10 years ago. It's just 50% air. It'll still be $3 a box. It's just going to be 70% air.
Well, the Fruit Loop always was 70% air.
That is true.
That
aside, the loop itself. But I'm talking about the bag. And that's how companies combat things like inflation, right? I mean, they don't want to raise prices either. They don't want the consumer to, case in point, look at the price tag on the shelf at the grocery store and think, holy smokes, things are going up. So what they do, they went from 16 ounces to 12.
Yeah.
And then to 10, and then to 9. And you're paying the same price, but you're getting half as much. And that's across the board in our country. That's healthcare, that's food. It's across the board. Education, and the value of the Dow Jones Industrial Average.
There you go.
It's all across the board.
Related to dollar to oil, dollar to gold, dollar to silver. It's felt. Now, I'm going to challenge the listener on two things. One, be smart and really do some planning this month. Get your positions taken in your metals this month. Okay. Two, turn your radar on for inflation in the mainstream media. It's being mentioned. Something's changed, Miles, and there's a sea change, and the word inflation is now rising. So you're ahead of the curve right now. It's starting to get some attention because they know what's coming. You're seeing some policies being formed and decided upon as a result of a fear of inflation. It's coming, right? The dollar's coming down into the 80s on the dollar index. Analyze that.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. Continue to join us in the comments. If you liked what you heard, hit the subscribe button, ring the bell. Head on over to McIlvaney.com if you have additional questions about McIlvaney ICA and the precious metals dealers here. You can reach us at 1-800-525-9555. 856 if you'd like to discuss your personal portfolio, and can also find us on Twitter at ICA Gold or Facebook at McElvaney Financial. Thanks for listening.
Have a great week.